The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yeah, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Nadex Bull Bear Option Hour. I'm your host, Steve Rhodes. Tom is on his way back from Boston after doing a fantastic function where he was discussing the Tiger Real Estate Opportunity Fund. And, folks, if you haven't had a chance, go to the homepage of TFNN.com. Take a look on the right-hand side. There's really two things that I want you to be able to do there. In fact, I'm going to go ahead and call up the page here on my screen on TFNN, and what you can see is over on the right-hand side under the banner section, well, number one, you'll see Nadex. So if you haven't signed up for your free account there, click on that Nadex band, click on the Nadex symbol first, and then go ahead. It takes you about, 2 minutes or so to go ahead and sign up for your free Nadex account. And then just underneath it, two things underneath it, you've got the Tiger Real Estate Fund. Click on that. You'll get all the information about that. There's also a paper up here on the white paper, the bull market in Florida housing. You absolutely want to download that paper. All types of great information in there. Understand exactly what Tom is doing. Mr. Bernanke is thinking the same thing out there with regard to real estate, as well as so many other folks out there. And as long as you're over there as well, now is a great time to buy gold and silver. I know it's high, if you will, or higher than it was, but right now you've got gold trading out at $1,776 and silver at $34.68, and now is a good time to buy it, folks. So if you're interested, you can call us at 866-618-8888. Also a good time to convert maybe some of your old jewelry into some coins and have those around because, inflation will eventually be here, folks. That will be probably the so-called next side of the bubble that's out there. And so go over to the homepage of TFNN.com, and don't forget this weekend. This is the last weekend, folks, for our Tiger Dollar promotion program. So you want to make sure that you sign up for that. This is where you have the opportunity to turn your money into a 20, 30, 25% bonus. $500 becomes $600, $800, $1,000, $1,150, $1,500. That's the one that you should go for. The Tiger Dollars, folks, are totally transferable. That means you got the holiday season, so either give yourself a gift, buy yourself a gift, have your other half or family members, kids, when they say, what do you want? You can say, well, what I really want to do is I want to invest in myself. That means you're going to invest in yourself because then you're investing for them. That's really how that works out there. So give yourself the best gift you possibly can, which is always to continue to move into your education. If we take a look at these markets out here, markets are up 74 points right now in the Dow. You've got the S&P up almost 10 points, the Composite up 30 points, the Russell 2000 up 9, New York Stock Exchange up a full percentage point, up 82, the Indy X up only about 0.9%, up another 25 points. We do have the U.S. dollar index down 60 cents, getting smoked. Gold, as I said, trading up $4 today, up 17.76. Silver pulling back just a little bit, but it wants higher prices. Light sweet crude wants the $100+ mark. 99.85 is what it's trading at right now. $1.54, up $1.54. If we take a look around the world, the DAX up 1.5%, up 107 points. The FTSE up 1.7%. FTSE now got their invitation. Apparently, their invitation was got lost in the mail, but they are now participating in the party. You want to talk about overseas? Go take a look at the Hang Seng. The Hang Seng up 3% last night, 582 points. The Shanghai up 0.6%. Of course, the Hang Seng had really moved up higher. We are looking at the EES Mini on the Tiger TV. If you're watching us on Tiger TV, if not, just go to the homepage of TFNN.com, click on Tiger TV. You'll be able to see this. If you're listening on the radio or on your mobile device, this show is on Channel 10. And so you can catch the archive of this. You can see here in the first 30 minutes of trading, the bulls jumping in on the ES Mini, doing 223,000 contracts. The low for the day, well, I will say the low at that 10 o'clock session out at 1454.75 should be pretty darn good support. Let's go to Tampa, which is just down the street from us, and let's go to our man Ed. Ed, thanks for calling. Thanks for holding.
Steve, how you doing this morning?
Absolutely fabulous. How about yourself?
Not too bad, not too bad.
You know, this is the time. This is the time of year for us, isn't it? You know, we're starting to get into that nice, where it gets a little bit cooler at night, and nice mornings. Are you originally from Tampa, Ed?
Actually, from New Jersey.
You are. Oh, that's great. How long have you been down in Florida?
Since '79.
Oh, very good, very good. Do you have a lot of family that still comes down to visit you?
Nope.
You don't? Oh, okay. All right.
I have to go and visit them now.
You do? Okay. All right. Well, that's great. That's great. You wanted to look at Fibonacci expansion ratios. So tell me how I can help you there.
Yeah, like I use the Thinkorswim platform, and I noticed that, you can pretty much put any ratio in there, but I noticed they have it set for, like, say, the 100, and then you go to 161.8 and the 2 and then the 4. But I thought I heard you use like the 1.2 something.
1.1. Yes, 1.272.
Huh, 1.2.
Yeah, so the Fibonacci, summation index, folks, it goes like this. If you were, I can't put up a spreadsheet on my screen, but if you just take our number system. So you take 1 plus 1 is 2, and then 2 plus the prior number, so 2 plus 1 is 3. That would mean 3 plus 2 is 5. 5 plus 3 is 8. If you just keep going out like that. Now, what you do is you take the preceding number, so you take 2 in this case, so let's say for the number 5, 5 is 3 plus 2. Take 2 divided by 3 and 3 divided by 2 in 2 separate columns, and keep doing that all the way down. What you're going to eventually get to is you're going to get to where the number comes out, I think after you get to maybe the 8th or 9th iteration, to 0.618 and then 1.618. And then what you want to do is you want to go ahead, if you take the square root of those numbers, that's going to get you to the other Fibonacci numbers and retracement numbers that we do. So, for example, the square root of 0.618 is 786. The square root of 1.618 is 1.272, I believe. So that's where those numbers come from. So the numbers that you should set up on your system, I also use 100% because that way you know where you're starting from, which swing point you're starting from. So I'm using 1 and 0. And when I take a look at my Fibonacci tool, I'm using both retracements and expansions. And the numbers that I suggest that you would use, Ed, would be 0.382, 0.618, and 0.786. Now, 0.382 is used for a couple of reasons. Number one, when you're measuring swing points, 0.382 is basically going to be that dead cat bounce area. That is the normal area for something to bounce when it starts to make a turn in between swing points. It's also a place where you would be measuring to see how many people are getting off of the elevator. And what it's also used for when you're measuring, when I take a look at measuring a retracement level, if an equity or anything that you are trading only retraces to the 0.382 level and then continues its movement either higher or lower depending on which chart you're looking at, what that's really telling you is the amount of energy on that next move up. Because a 0.382 retracement says, you know what, it had a lot of energy, it didn't really need to rest, and it is ready to be, who's that guy who was the fastest man in the world? Bolt? It's ready to bolt on. And on the expansion side, you want to use 1.272 and 1.618. There's additional expansions you could use, which would be 2.618 as well. So do you have the ability to do that on the Thinkorswim platform?
Yeah. Now, you said the 1.7, what was it?
So you got 1.272.
Oh, 1.7.
1.272 and 1.618. And those are, and, the Leonardo Fibonacci, how this guy came up with this math back in the 1500s is amazing to me. But it's out there in art. It's out there everywhere. If you take a look at a rose petal, you'll see a Fibonacci summation series. It works in art. If you were to go take an art class, they would actually take the face and they would separate the face in between the 0.382, the 618, the 1.618 area, where the eyes go, the mouth, the lips, the nose, the whole bit. And it's because it's also visually appealing to us. If you take a look at your hand, you've got 5 fingers, right? And if you take a look, each finger, you've got 3 little joint areas, 3 little pads that you've got there. So Fibonacci numbers, for whatever reason, they exist, and they also just simply expand and contract. The market's always expanding and contracting. Right now, we're going to be in an expansion. The money supply is going to expand, and the market is going to expand.
Awesome. Yeah, I noticed that I think it was the YM kind of pulled back to the 38.2, I think.
So you're looking at the Dow futures. So let's go ahead and pull that up. And what time frame were you looking at there, Ed?
I think on the 5 minutes.
The 5 minute. Okay. Yeah. So let's go take a look at that here with Ed. We're going to put up the Dow futures, and we'll put it up on a 5-minute chart. If you take a look at the Dow futures, it's taking on the top of its rising price channel. So it may be getting to an area where it's going to have a little bit of a timeout, and pull back. But let's go take a look at the 5-minute here. And on the 5-minute chart, as soon as mine comes up on the screen here, there we go. So now when you're taking a look at the retracement, which level are you taking a look at? The low that came in at about 9:10 this morning?
Well, actually, I'm looking at my witch call now. It's when I took the high yesterday to the low, and then to the high this morning.
Okay.
Sure enough, it did a 161.8 retracement exactly.
Exactly. Yeah. Well,
a lot of people say, I've heard you said too that these are not exact, but more than amazingly enough.
I know that's.
It will split the penny right in half.
Oh no, that's actually the beauty about being able to do live radio / television like we do, and we have callers that will call in and ask about a stock chart, and for as long as I have been using this tool, I'm still always amazed when it's right to the penny, and as so now when I trade. I'm not trying. Look, as much as I'd love to buy the bottom tick and sell the top tick, and I've done it a handful of times, it doesn't make you any better of a trader. Actually, if that's what you're trying to do, I think you're just delusional. What you're using that really for is a range, and then just make sure you understand what the average trading range is and have a wide enough stop so you don't get stopped out. But it's a absolutely excellent tool to help you, and it's really helpful. We take a look at some of these trading patterns in the markets. When you use these Gartley patterns, these 786, those are my favorite patterns, and the reason is because when they fail, number one, it's going to continue on, it's going to make that 100% move of a move, but in the longer term aspect, it wants to now make an expansion, 1.272 expansion. That's what's going on in the XLF, that's what's going on in the energy sector, and I suspect it's going on in the other sectors as well. So you use that tool and have a lot of fun with it.
Thank you, Steve. Yeah, I noticed that now the Dow futures have now just completed a 1618 to the outside.
Yeah, it's beautiful. It is beautiful. Yep, absolutely. All right, my friend. Hey, have a great day.
Thank you, Steve.
You bet. Stay tuned, folks. We've got the Dow up 97, S&P's up 13. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow up 105, S&P's up 13, and, just taking the conversation that Ed and I were having about Fibonacci expansion and contraction. Let's go take a look at the New York Stock Exchange. Now, when we take a look at the New York Stock Exchange, we're going to take a look. If you're watching us on Tiger TV, you see a number of different patterns that we've got out here. And let's just take a look at how these Fibonacci expansion and retracement numbers come together, because this is really what it is that you're looking for. So I'm going to start off with the New York Stock Exchange, and we're going to go back to March 19th, 2012, when the swing point high was out at 83.27. Then the price moves down from that swing point high into the low that was established April 10th as it got down to 78.35. Then makes a move up. So your A point on an A to B equals CD, where the market had a reversal, a change in polarity, a change in trend out there. So the A to B equals CD. This is in order to be able to identify a Gartley pattern out here. That's going to be the low of April 10th at that 78.35. So the B point, market moves higher, moves up into the April 17th level, gets up to 80.58. What's it do? pulls back, does a little bit over a 0.786 retracement, actually does an 84% retracement there, but it pulls back to create the C point. That's on April 23rd down at 78.77. Makes the D point, completes an A to B equals CD, and it does that, folks, on May 1st. May 1st, 2012. Now you got the sell in May, scenario there. As a New York Stock Exchange is doing that, it was making a 0.786 retracement off of the high, off of August 19th to where the D point was made. It made a 1.618 expansion of swing points. That was your B to C level. So again, here, all you would do is if you took the B point, which was 80.8058, subtracted from that the low of 78.77, took that number, multiplied it times 1.618, added it to the low of 78.77, that would give you the target of what May 1st high was, which was 82.11. That set up, obviously, a cascade waterfall. That set up a large A to B equals CD down. If we take a look at the A to B equals CD down, we'll start with our A point, which was the high. We'll take a look at that. And what it did was it made a 1 to 2 A to B equals CD. So if you owned the art of timing the trade, if you went ahead and took a look inside there, what Tom will tell you is if you do a 1 to 2 A to B equals CD, you're almost always, the probability of having a change in trend is right there. What does the market do? It absolutely does change trends, and does that here on the period of June 4th. Now, June 4th happened to be, I believe, might have been one of those super full moons that we had out there. So, I can't tell you why Fibonacci numbers work. I can't tell you why the lunar system works. We are coming into a new moon, so this, which is going to be on Sunday. So what that sets up may set up a opportunity for the market to pull back a little bit. So for those of you that aren't buying Uncle Ben's, haven't bought Uncle Ben's Market, that might give you an opportunity to see some type of pullback for a day or two. Nothing unhealthy about that at all. In fact, a lot of things just simply over the last couple of days have moved into a overbought situation, so that needs to wind itself down at some point here. However, let's go take a look at these A to B equals CD patterns. So that June 4th low, that was a point. If we now go take a look at A to B equals CD up, we'll start with the June 4th low. We come all the way up to the high on July 3rd, and we come all the way down now to the July 24th level that was out there. You can see right now that price is above the 1.272 A to B equals CD. That sets up its next level as 1 to 1.618. Now remember, on the way down, what it did was a 1 to 2 A to B equals CD. At the 1 to 1.618 level in the New York Stock Exchange, that is 85.41. What you also have up there is you've got a larger 1.272 expansion that goes all the way back to that swing point that we started with on March 19th. So from the March 19th high to the June 4th low, if you took that dollar difference, multiplied it times 1.272, added it to the bottom, that's going to get you right up here. So expect the next real area where, as your pilot, I will be putting on the fasten your seatbelt sign, where we're going to get a little bit of turbulence as the New York Stock Exchange gets up to 85.42. Is it possible, though, I will throw that out to you, that since it made an A to B equals CD down that was a 1 to 2, that what the New York Stock Exchange is really going to do is make a 1 to 2 to the upside before there's a change in polarity? I say yes. I say that what we would take a look at there is, I'll bet you we're going to find sweet 1.618 expansion of those two swing points. So let's take a look at it. We're going from the high of March 19th all the way down to the June 4th low level. And now let's go take a look at where that 1.618 level takes you to. 1.618 takes you to 90.10. So 89.02 to 90.10 is where I think that New York Stock Exchange wants to move to. Why? Because of Uncle Ben's words. We'll go read those words when we come back from this break. 877-927-6648. Dow's up 90 points right now. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. We are taking a look at the euro here right now. And so before we go take a look at, let's take a look at the euro chart, and then we'll come back and talk about it. I've got the weekly chart up on my screen here. And so we're taking a look at this black diagonal line that you see here. That's really a trend line that goes all the way back to the May 6th high out there. That's when the euro was up at 149.389. Then it's got a couple of different touch points I'm really using here. The level from October 28th when it made a high of 1.42. What you are seeing is you're seeing the euro break above that area. That is a real breakout, folks. And, the euro is going, unless something just simply totally happens, which is not going to happen today, falls off. This area is going to close above this. And when you get a break of a trend line like that, it's giving you a bunch of information. Now, What you can't have happen here, what I would suspect would happen, is that you would see the market pull back and test that trend line. What the market has done, we were talking with Ed in Tampa, who was taking a look at just simply using the Fibonacci numbers. So if we go from the high to the low there, the red lines, the red horizontal lines that you're taking a look at, what you're looking at is the euro has gotten back up to the 0.382 level. That's a 0.382 retracement. So a normal dead cat bounce out there. So 1.31481. So it's a normal area for people who reverse course and went long the euro, for them to take some nice profits off the table, depending on when they would have gotten in. It's an area where you're coming into a Friday. Now, if you go take a look at the last Fridays, the last 10 Fridays, and maybe if we have time, we'll go do that. I think it's about 80% of the time. Well, what a market does on a Friday, folks, gives you a whole idea, gives you a real important understanding of the psychology of the marketplace. Look, all kinds of crazy stuff, all kinds of nuts, on top of all the crazy stuff going on around the world. And world events are going to affect markets. They absolutely do out there. And so when people are going home long and strong over the weekend, what is that telling you about the psychology of the markets? Well, some might say, hey, they're complacent. Others would just simply say, means that, you've got folks that certainly have got more bullish in their thinking process. So right now, the euro has gotten up to an area, 131. It's a level on a daily chart that's an expansion of swing points. It's on the a weekly chart. It's a 0.382 retracement. So it's up against some pretty strong resistance. You would expect that the session might finish out in this area here, in the euro, in the market, where it's at as well. And so what you'd be looking for is you'd love to be able to see a pullback in the euro and test that trend line. Why? Because that would give you an area for you to actually go long the euro or make some other adjustments in your trading. But what that's really all about, and I'm going to read you what I think is the most important aspect of the, I think it was maybe about an hour's worth of his speech and the Q&A from reporters out there. And you can find this exact clip as well. It's probably about 15 or 20 minutes into it. But Ben's exact words were, the tools we had, and this was a question that came, this was during the Q&A, might have been the third or fourth question that was asked. Maybe it was the fourth or fifth question, and it was the same question just posed by a different reporter out there. So I was getting maybe just a little bit irritated. And the words that he chose, I think, were very put a lot of meaning into what's really going on here. The tools we have involve affecting financial asset prices. Those are the tools of monetary policy. To the extent that home prices begin to rise, the consumer will feel wealthier. So he absolutely wants each of us to feel wealthier, right? They will be more disposed to spend, right? If you feel more wealthy, if your home prices is going up, because that's for most people is the bank, more disposed to spend. When he's talking about that, if you have the white paper that's available to you on the homepage at TFNN.com that Tom put together, it's labeled The Bull Market in Florida Housing, all kinds of charts in there that help to support what Uncle Ben was also taking a look at. If stock prices are rising, he said, people may be more willing to buy homes, right? He wants people buying homes more so than just investors out there, but they're certainly being consumed out there. That's why Tom has started the fund, so you can check out that information if you're a qualified investor. If you take a look at, so let's go back to what Uncle Ben had to say here. He said, if stock prices are rising, people are more willing to buy homes because they will think they will be able to make a better return on this purchase. Well, he's right. There's really no better. You buy assets. If you're trying to buy low and sell high, then, real estate is a good place to invest in, for sure. Then he goes on to say, so house prices, he says, is one vehicle. Maybe he should have said are. So house prices are one vehicle. Stock prices, many people own stocks directly or indirectly. 70% of you own stocks indirectly. Really, it's directly, if you will, but it's really through your 401k program. That's what he was talking about. And what he said was, So house stock prices many people own. At issue here is whether or not improving asset prices will generally make people more willing to spend. One of the main concerns that firms have, he's talking about companies, is that there is not enough demand. Well, certainly we even see that in the way that the stock charts trade here. Certainly not enough demand. There's not enough people demanding their product. Now, I think he's really talking about housing more so than anything else. So there's not enough people demanding their product. And if people feel their financial situation is better, their 401ks plan look better for whatever reason. Well, the whatever reason, folks, is Uncle Ben here, is liquidity in the marketplace. And when you put liquidity in the marketplace, we don't know where it's going to end. In this case here, he hasn't given a date. The date that he talked about was even when things start to look good, he wants to be there to support the marketplace. That's assuming he still has his job. And so plans look better for whatever reason, and their house is worth more. They will be more willing to spend, and that's going to provide the demand that firms need in order to be willing to hire and invest. And so those are his words. I think that understanding those words is a really important thing to do. This is the third time around. The third time is the charm out here. If we go take a look at the indexes, let's go back and just simply put up the S&P 500 on the weekly chart in case you didn't get a chance to see that yesterday when I was filling in for Tom doing his shows, or on my 9 o'clock show this morning. But here's the S&P 500. You can go ahead and apply these dates to any chart that you're looking at as well. I'd suggest that you apply them to gold and silver. And then maybe you can make a decision about whether or not you should go ahead and if you don't own gold and silver, now might be a really good time for you to do that. You can give me a call at Tiger Metal Exchange at 866-618-8888. Would be happy to help you do that. It's a great time to convert your jewelry that you don't use into gold and silver. We do that for you as well. You had QE1 that took place on November 25th, 2008. Those lows were taken out. Of course, we had the financial crisis was I don't know if it was a little bit different. Back then, I'd say the financial crisis now is worse so. But what you've got banks all out there, putting out more money. But that low did fail. And when that low failed, that said you shouldn't be long this market. Now, what it did, if you take a look at the expansion of swing points, and let's do this. If we go from the low that was put in during that week, which was 11:25 is the week. That's probably the day when the low was put in during that week. 801.20 was your low, and the high was put in on January 16, 2009. And what you'll see is a low that was put in there came to the 1.272 expansion of those two sets of swing points, and then the week of March 6th, everything just totally took off. So that's QE1 that we have out there. And if we take a look at QE2 here announced August 27, 2010. The low out there, 1039.70. Obviously, we haven't seen those lows since then. We got back up to the high of that area. If we take a look at the high of that swing point, it was 1081.58. 1051.88. That took place on October 4th, when the market moved lower. You had Operation Twist that came out on September 21st. So that September 21st low was never taken out. It was tested, but it was never taken out. And now what we've got is QE3. I believe that the lows of this week are very important. You get a close below these lows, and it says QE3 or not, don't be along the marketplace until you get some other type of pattern that sets up. But otherwise, go right ahead. Look for your entry points. The market will not just go straight up. The patterns of going up and down on daily charts, this is a weekly chart that we're looking at, or on intraday charts, they absolutely will. And it doesn't mean you can just blindly throw money out the window. Just take a dart and throw darts at equities out there. You want to. The candle patterns are something you absolutely want to be paying attention to, because they will tell you, what is going on between the bulls and the bears. They'll tell you when to be cautious out there. We take a look at what else is moving in this market. Well, certainly bonds. Bonds getting smoked here. Bonds down now for a straight number. What is this? 8 or 9 days? 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 9 straight days down. Bonds trying to now complete a 1 to probably a 1 to 1.272. A to B equals CD down. Bonds taking out the swing point from August 21st. The low there, 145.03. You're at 144.250 right now. The 1-to-1, just a simple 1-to-1, takes you to 143.215. But now you start taking a look. When you're making swing points, folks, with wide-ranging bars, I can tell you that means that the market wants to go either, in this case here, lower. You're making wide-ranging bars. As you start coming into that area, that's telling you that the market wants to look for a lower price. You can see the move off of the C point here, and if we take a look at that C point, what we'll see is it was one of our Fibonacci retracements off of the high that was put in here. So the July 25th high down to the low that was put in on the 21st of August. The 0.786 level was 151.18. You had bonds actually get up on September 4th to 151.29. They closed out at 151.04. That is what set up the C point for an A to B equals CD down out there. And again, I'll go ahead and drew that off the screen here. Now, that really sets up, if you take a look at just simply coming from the low of March 19th all the way up to the high that was put in on the 30-year on July 25th, the 0.618 retracement is 142.03. So again, let's go back. Let's put in our A to B equals CD down on bonds out here. And what you'd be looking at is that is the 1 to 1.272 A to B equals CD area. That is on bonds. Let's go take a look at some of these stocks here that are moving and grooving. We got Priceline up this morning here, up $13 and change. Let's go see what Priceline is doing. PCLN is the ticker symbol. I know that is got some gap down. So this thing here is into the gap here. I was actually looking at this equity last night as a potential buy here earlier this morning. Why? Because it was inside this gap, and this thing here is going to run at least to the area where it broke down, or it should. That is the August 7th date. That has 2.8 million shares. The low of that is 672. It's at 640 right now. Doesn't have any very large volume here on the way up, but it is traveling up to that area. You know, Priceline certainly had been a darling out here. Let me put this on the weekly chart. Let's take a look at, see what kind of damage is out here on the weekly chart. Let me refresh my screen and get the volume. And so, you know, once this thing, if this Priceline can get above the 682.97 level, that's where he had that downdraft on August 10th with 14 million shares, then, you know, that might be something good to, maybe something worth taking a look at as far as going long and strong. You know, who's going to be the new leadership coming out of this? You know, the stock had some damage, but not so much that this thing can't recover, because if you take a look on the weekly chart, and let's do that, the retracement off of swing points, all that it really did, although it did it with volume, came back to the 0.618 level. And the volume up at the highs here, 8.2 million shares up at the April 13th level. So that is on Priceline, and that looks to be trying to make its way back up. If we take a look at what else is moving, well, we know Apple's up $11 here today. And that has taken out a resistance area. Let's go see if there is any kind of volume behind it. Where's my Apple chart? Come on. Oh, where are you? There we go. Apple. Thank you. So we got Apple. Let's see, volume so far. So it looks like pretty decent volume thus far. That's what's going to needed. That's what's going to be needed in order for the Qs to get going. If we take a look at Apple, September 14th today, 7.8 million shares. That's going against a swing point, couple swing points. Let's look at 15 million shares on August 27th. So it should have the volume today. Only an hour and 15 minutes or so into trading. Also, the resistance area of 17 million on September the 10th out there. Again, today, already 7.8 million. Apple wants to trade to 714 as its next target level out there, trading at 693. So that'll put a little bit of energy into the Qs. And as I mentioned, you just don't throw the darts here and just take any stock chart. You want to pay attention to candle patterns out here. Yesterday, we were looking at this equity, which looks pretty good up until yesterday. Of course, is this really the volume today? What the heck is going on here? Let me just make sure here. This is pretty wild. So we're taking a look at GWR. When we come back from break, we'll go ahead and take a look at this equity. 877-927-6648. You got the Dow up 65, S&P's up 9. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. So before we went to break, we were taking a look at this equity. We were looking at it yesterday. The ticker symbol on it is GWR. That is Genesee and Wyoming. Now, yesterday was what this, so far what this has formed here is an island reversal candle formation. Yesterday, it gaps down, has big volume in it, did 1.5 million shares yesterday, having bigger volume today, 1.7 million. Now, it'll be interesting to watch how this pattern here plays out. Now, I did not, an island reversal is a very daunting sign on any stock chart. And so if you're in this equity, it says be very, very careful. Now, you'd like to see the volume that this thing has coming into it today, but, the question is this a chance to get out of this equity or not? So candle patterns, are something that you want to be paying attention to on any stock chart, whether it's daily, monthly, weekly. They absolutely are telling you what the bulls and bears are thinking out there. You can throw away the news because the news is right here on a stock chart in front of you. Now, one of the reasons yesterday we were talking about why at that stage it certainly didn't look like a short alternative was because it had some pretty decent support in the areas of $64 or so. Now, of course, at that stage when we were looking at the equity here, it hadn't traded all day, so it had some big volume. If we pull this back here, you can see, really big volume days out here. This thing also has some support at the May 1st, 12th high, $60, $59.99. It's traded at $66 right now. So the reward to risk on this trade, may not really be in there from a short side, and you'd really like to see it take out a swing point with volume. It hasn't done that yet, but it's one to pay attention to. I'll go ahead and keep this on my screen. We'll see how this island here plays out, but it's got some big volume in this equity here today. And patterns, folks, that is really what it is all about. I'll show you a pattern here. This is a trade that my clients and I are in, Great Panther Silver. They also are one of our sponsors out here. But on the weekly chart, this set up a terrific Gartley buy pattern. It completed an A to B equals CD down. It did a 0.786 retracement. And what it did, folks, is it created a hammer right here. Created one of my hammers on July the 11th on the weekly chart. Made another hammer right here on August the 17th. I believe that may be when we got into the equity trade here. That's because this hammer, I didn't like the way that it had traded the following week. We got in on this equity here sometime during the week of August 17th, I believe it was, in the $1.60 area or so, trading out at $2.46 right now. What this thing has, what you like to see about a stock chart is if you take a look at this is the weekly chart, and this has volume at the highs. So the week of March 11th out there, it's got volume of 33 million shares. The low is 380. The high is 504. On the longer-term basis, I suspect that that's where this equity wants to trade to. If we take a look at the daily chart, this is on Great Panther Silver. You can see that it has cleared resistance here. That was this shooting star swing point from May 1st. This also has another high volume day. So in essence, on the daily chart, you've got a high volume bar on February 29th. The low is 261. The high is 294. It's traded at 246 right now. That is its next stopping point. And that is on Great Panther Silver. Stay tuned, folks. Basil Chapman will be with you for the next hour. And after that, we come back to here in Clearwater, downtown Clearwater, to Nico DeHaan. He will get us healthy, get our minds healthy. Basil and I, we're working on getting you wealthy. Then we go from 1 to 2 to Daryl Martin, 2 to 3, The David White Show, 3 to 4 with Ken Shreve, and Tom will be back with you from 4 to 6 to wrap things up for the market for the weekend. Have a great weekend, folks. I look forward to seeing you on Monday. Take care. See you soon. Bye-bye now.